Development finance institutions (DFIs) provide risk capital for economic development projects on a non-commercial basis. Ghana is currently in the process of setting up such an outfit called the Development Bank Ghana with funding from internal and global partnership sources. Among the objectives for setting up the bank is to position certain sectors of the Ghanaian economy to attract the needed global investment. Many DFIs across the continent are also in the process of positioning their economies for similar investment. It is in this regard that the Bank of Ghana is asking these institutions to implement policies that will enhance their credit ratings in order to attract global investments. The head of banking supervision at the Bank of Ghana, Osei Jesse, was speaking on behalf of the governor of the central bank at the 2022 Annual General Assembly of the Association of African Development Finance Institutions.
African DFIs should work as enhancing credit rating positions. In spite of the large numbers of African DFIs, access to global debt, capital, and loan markets continue to be dominated by few lending multilateral African regional DFIs, largely due to innovations in credit enhancement and restructuring. It is imperative, therefore, for DFIs to implement policies that will enhance their rating in order to attract more global investments on more favorable terms, including longer tenors and lower interest rates. Furthermore, African DFIs need to create a pool of bankable projects to attract. The issue of bankability of development projects has long been a topic of discussion by the development finance and investor community, and is one of the key bottlenecks in attracting private capital to close the wide infrastructure gap. The onus is, therefore, on African DFIs to de-risk development projects and make them attractive for investors.
Following the recent increase of the monetary policy rate by 200 basis points to 19% due to the high inflation rate, Managing Director of the National Investment Bank, Samuel Sarpong, disclosed that his outfit is set to review its fees and charges to adjust to the current monetary policy situation.
I mean, all banks are going through a period adjusting to the various economic conditions as well as monetary policy situation. So, for example, the cost of doing business has gone up significantly with the inflationary rate, and all banks are adjusting their rates and fees to make sure that they make a profit and don't incur losses as a result of the various changes in the economy and inflationary rates. So similar to other banks, NIB is looking at its interest rates, is looking at its fees and cost of doing business, and adjust appropriately as any other business would do.
The 48th Association of African Development Finance Institutions Annual General Assembly, which was hosted by the National Investment Bank, was under the theme Unlocking Innovative Resources for Development Finance Institutions, Agenda for African DFIs.